Welcome to the Vision CreatHER Podcast, from corporate to creator, with your hosts, Pamela Martino and Debbie Williams.
Good day, everyone. Debbie and I are here again with another amazing topic that we're bringing. We say that every single week, but again, this is a really good segment that we're going to be talking about today. I have the honor and pleasure of having Nolan Martino and Ryann Williams here to speak on finance, budgeting, digital assets, Bitcoin, and it's going to be a phenomenal segment. Just full disclosure, Nolan is my son, and Ryann Williams, although he and Debbie have the same last name, there's no relation. But welcome to you both.
Yes, welcome, guys.
Thank you for having us.
Thanks for having us.
Absolutely, absolutely. We're super excited to have you guys both here. I think it's a much needed discussion with all the things that are happening in the world, and you know, TSA workers working but not getting paid, and just the inflation, and people just not having the resources or tools or even the knowledge of investing. And what does that mean? And what does it look like? The amazing thing is that we have a millennial and a Gen Z who are going to be the voices going forward, advancing your generation and the generations that come after you all about this very topic. And so Debbie and I have the benefit of being in the middle and just being able to absorb the information and applying the things that we haven't already done to, like, digital currency or digital assets. That wasn't a thing, Debbie, 30 years ago.
I know, yeah.
But excited for, what we see it doing in the financial space, and, how we all can benefit. So without further ado, I am going to turn it over to Ryann. And Ryann, I'm going to let you start with introducing who you are, your company, all the things, and talk through what we're going to be learning from you today.
Sure. Well, thanks a lot for having me. I'm Ryann Williams. I'm the founder and CEO of Jory Coaching, and as well as Findy Money. So Jory Coaching is my personal finance coaching service. We have a consortium of coaches that take a really, I'd say, therapeutic approach to trying to understand what drives our behaviors that put us into the financial situations that we're in. And then we try to marry that behavioral lens with the actual financial lens and put it together into action that helps you make a plan. And then we give you a loving kick in the butt sometimes to hold you accountable to that plan. So that's kind of the philosophy of both the coaching business as well as Findy, which is an app that we're building to help support that accountability and discipline in finance. So that's kind of me. I guess my background is I have degrees in finance and economics and MBA, but also a long career in operations management.
Awesome. Well, welcome again. Nolan, I'm going to turn it over to you. You want to do an introduction?
Yeah, my name is Nolan Martino, 25 years old, based out of Charlotte, North Carolina. I run a Bitcoin consulting business, trying to help people get onboarded to Bitcoin, how to buy it, how to safely custody it, take payments in Bitcoin. And my journey started in college at North Carolina A&T, kind of just understanding financial literacy and wanting to figure out how to invest, and kind of been down the rabbit hole ever since. So I'm just very passionate about, educating people, getting the information out, and trying to help people become free and sovereign as possible. So I'm excited for the conversation today.
Awesome. Thank you, Nolan. Thank you, Ryann. Debbie, is there anything you want to kick off with, or is there anything?
Yeah, this is interesting. So Pamela, you mentioned that we're the Gen X, I guess.
Yeah.
And so for a Gen Xer, there are some that are still afraid of the whole Bitcoin because it's not tangible. It doesn't feel tangible, right? But yet with the dollar imploding, the petrodollar particularly imploding, there's you have the whole gold standard and all the things that are moving. It makes the Gen Zer a little insecure in terms of what's going to be the new currency, right? Which is definitely leaning towards digital currency. So with that said, how does one transition from, first of all, there's so many digital currencies, you don't even know which one to choose from because it's so cryptic, uh, tongue and teak. It's very cryptic with the all the different modes of digital currency. And plus, even with the Bitcoin, it's taken a hit, like huge hits, huge swings. It's very volatile. right? So for a person who's used to security and used to not those type of swings, those huge swings that you're seeing in digital currency, it makes one very insecure, especially if they're preparing for retirement. I mean, if you have a long runway, that's okay. But if you have a short runway, it seems extremely risky. But yet, at the same token, you can't stay as you are in this current market because of what's happening to the petrodollar being demolished, right? So, which is going to bring a basket of a new digital currency. So, my question, I know I said a lot, right?
A lot. Yeah, it's okay.
That was a lot, but I'm sure you're picking up what I'm putting down.
Yeah.
So, how does one transition from, because you see it coming, the writing is on the wall, the dollar is imploding, right?
Yes.
So how does one transition from dollars as their traditional currency to now a digital currency? And where do they start?
Mm.
Yeah, there's a lot there in that question. I would say you got to start small, right? For me, I've been learning and kind of just consuming information for the last, 3, 4, 5 years. So like I operate and live on a Bitcoin standard, but I would never advise anybody to do that from the jump. So the most important thing is information, like you said, is there's a saying in like the Bitcoin community, you need to first understand the problem before you can appreciate the solution. So understanding the problems of fiat currency, understanding inflation, understanding why the monetary system is broken and why you need an out is first. And then two, you can come to realize why Bitcoin is a solution to that. So that's one. Two, once you do kind of start to understand that, start small. Allocating, I don't know, 5, 10% of your net worth or your portfolio allocation to Bitcoin. And as you just continue to learn more and get more comfortable with it, you can probably increase that percentage allocation. And I guess lastly, yeah, people ask about all the time, like there's like a million cryptos, like how do I know, which one's going to be the one? I always say there's Bitcoin and there's everything else, right? There's Bitcoin and then everything else that was created is most likely created by some like a real person that has something called a pre-mine. They created the coin out of thin air and they have an uneven distribution of it and then they dump it and sell it off to people to profit off as like liquidity. So
Mm,
there's Bitcoin is a completely different own separate animal we can get into, but I believe Bitcoin is going to be the winner out of everything and to kind of just ignore everything else.
mm, okay.
Yeah, that's really good, Nolan. And just, full disclosure again, Nolan is my son. And so I've been hearing this conversation for Nolan, I think it's actually been longer than 3 or 4 years, probably more like 7 years
Yeah.
that, he's just been talking about digital currency and then made the shift to Bitcoin. And so slowly but surely I've been making the transition as well. And just, any you know, money that, I might want to take and put over into a digital asset, and making that shift. And just so I can have a little bit in Bitcoin and, still the traditional method that, we grew up on, Debbie. And
Yeah.
so,
Right.
go ahead. You
I
were
just
saying
also
something.
just thought about something too. Like you mentioned, Debbie, Bitcoin is very volatile. And I also try to make the distinction that it's volatile, but it's not risky. And there's two different changes there. It's volatile, meaning like it can go up and down on a wild swing for a month, for a year. But if you hold it for at least a minimum of 3 years, there's almost a 0% chance of losing money if you just continue to hold it for the long term. But I term risky as how likely is it to go to zero? And I think at this point in Bitcoin's adoption and how it's matured, it's a very, very, very low chance of it going to zero. So I like to make that highlight. And also, when I'm talking to people about Bitcoin, again, not mentioning them to go all in, but them trying to hedge themselves out of the dollar system, you can always buy gold for too. So you can do like, you know, I don't know, 50% gold or 50% Bitcoin or something like that, just to kind of also have some of a hard money, but like of an analog version, something you can tangibly touch. People know what gold is, a gold bar, and you can have some of that as well. So that was the original OG hard money before Bitcoin came along.
Yeah. Yeah. But Bitcoin is like 6,000 a share or 60,000. What's the price of
66
Bitcoin?
right now.
Yes. Who has
66,000.
66,000 a share, right? So,
But the beautiful thing is you can't own fractions of it. So you can buy $1 of a Bitcoin, you can buy $10 worth of it, and over time that accumulates to one Bitcoin. Because Bitcoin is divisible by 8 decimal points. So that's what I always tell people too. Like when Bitcoin a few months ago was at 126,000, they're like, no way, I missed the boat. Like I can't buy a whole Bitcoin. I'm like, you can buy $10 worth, and that's how you save in Bitcoin, and that's how you over time you'll accumulate a larger position and just grow your position size, yeah, over time.
Oh, okay, that's good. So Ryan, how does that fit in someone's portfolio, right? So you're the money man, right? That looks at
Mhm.
all these different vehicles and asset protection and hedging and all the things, right? So how does a Bitcoin or digital coin strategy or digital money, right? Rather, it's not even a coin anymore; it's money, right? And only you mentioned that you can spend it, right? I still don't know how, but how does that fit in the bigger structure of a portfolio, someone's portfolio?
Yeah, that's a great question. I think for now, I still see it as an investment.
Mm,
And because the majority of people are not using it as currency.
hmm
When we get to the world where everybody like is like Nolan and we're like buying our coffee, on Bitcoin and buying your car with Bitcoin, then I would see it a little bit more as like a currency. But as an investment, kind of like Nolan said, I would probably view it as like because it is so volatile, I'd view it as something that you kind of put a smaller percentage of your portfolio into, with the hope, of course, that it's going to have amazing growth because that volatility hopefully goes in the direction that we like, which is up. And you at the same time you want to be protected, from the volatility on the downside. So I'd have diversification for that. And as you said, as you get closer and closer to retirement, as you get closer and as you get older and want to have a little bit more stability, you might want to move your assets into things that are a little bit less risky, things that are a little bit more cash flowing. Your bonds, things that are lower risk stocks. And Bitcoin, I think, would be on the far end of the risky side of
hmm
things. But as I was young, as you get younger and younger and younger, I might go for a higher and higher percentage of it. And then as we see it start to stabilize, if we start to see it stabilize over time, as more and more people move to using it as currency,
hmm
then maybe it becomes, a higher percentage uh, of your portfolio as it starts to mimic something like gold.
Hmm.
But that's my thought process at least.
Okay, and how does gold play? Because gold is not, you can't go to the store and buy something with gold either, right? You can't give them a bullion and say, here, yeah, I want to pay for my groceries, right? So I'm just thinking about the practicality of it, because, I study all this stuff as well. And then some of the stuff is just not practical, even though some people, more boomers, like they keep safe deposit boxes in banks and they store their gold there, or they have a safe deposit box in their home or some kind of some have the actual what's those things
Like
that
like a vault.
Deposit
vault,
box?
yeah,
Vault, yeah,
Yeah.
yeah,
yeah, yeah.
a vault. Some people actually have vaults in their homes and they store bullions of gold,
Yep.
right?
Safe.
So a safe, that's the word. I'm like,
Safe. Yeah.
so from a practicality standpoint, um like how did that work? And then also you talked about bonds, and bonds are really is American debt, I'm assuming, right? I believe it is, right?
Yeah.
And so the
It could
American
be.
debt is not, it's not good right now. It's not good at all, especially the
Bonds
tension
don't have
with the
to be
war.
American debt. Bonds can be
Mhm,
anybody's debt. So you can get
mhm,
a bond from a private company. You can get a bond from a city.
mhm.
You can get a bond from an international city. You can get bonds from anybody who's trying to raise money. So it doesn't have to necessarily be the federal government.
Okay, because
Um, yeah.
like Treasury, the Treasury bonds are the federal government, right?
Yes. So
And
this is kind of like the federal bonds of the U.S. government,
mhm,
like treasury bonds. It's kind of like the gold standard of a risk-free investment.
mhm.
It's the closest thing to like people will tell you any investment comes with the chance of risk. It comes with the chance of it going to zero. And that's true even for a treasury bond. But treasury bonds are generally recognized as the closest thing to zero risk because theoretically the US government should always be able to pay back its debt because in a worst case scenario, they literally could just print money
I was gonna
and
say
print their
print the
way out of
money.
it. Of
Okay,
course,
Yeah.
nobody wants to do that because it causes inflation.
yeah.
But in a worst case scenario, they're going to be able to pay you back.
Hmm.
Okay, so someone's setting up a budget, right? Someone's looking at their finances, right? And they're saying, look, this economy is very unstable right now, extremely unstable, right? And there are some people talking about taking their money out of 401ks, just doing there's a lot of panic, the sentiment across the financial world, the sentiment of fear, the sentiment of worry, the sentiment. I mean, even Warren Buffett a few years back, I recall him pulling out a lot of cash out of his his funds, and they say, "Oh, Warren Buffett is pulling out a big chunk. There must be something going on." I'm sure he's pulling out so he can put it back in because he probably saw the direction of the market. It was going to be on sale. I know he likes to buy when the market is on sale, so I'm sure he's going to go back in and just buy up the place, right? So, but for an average person who's not a Warren Buffett, and they're considering pulling out all of their 401k so they can have, cash if the market crash or whatever. There's that kind of sentiment of taking all your money out of your
Your 401k.
yeah, your 401k, your IRA, all the A's, right? And putting it into a safe deposit box in your house, right? So in lieu of doing that, what would you recommend? And I know it depends, it's age dependent, but if you can go through the different age depend, like say for instance, if it's a Gen X or a Gen Z, stuff like that. So what would you recommend?
Recommend. Sure. So first off, I'm not a financial advisor. This is not financial advice. Just got to put
Hmm.
a disclaimer out there. Any investment comes with risk, and everybody has to shoulder their own risk. I'm always going to be hesitant to pull all of my money out and do all of anything. Like I said before, diversification I think is the number one thing that you want to do. As you're looking at what's happening in the market right now, yeah, there's a lot of downturn, especially with what's going on with the Middle East and all of that stuff. If you want to pull some money out and do something with it, number one is I would ask, is there going to be a fee on it? Because if you're below 65, you're probably going to be paying a 10% fee to try to touch your 401k or IRA. Whatever you're going to try to make up will have to be so worth it that it's going to pay you back more than 10% that you're going to lose. So that's the first thing. Likely, if you're below the age where you can pull from it debt free, I mean, without the fee,
Mhm.
are you really going to find something that's going to pay you back 10% plus whatever gain you're going to be missing out on? So for most people, if you're my age, if you're millennial, if you're Gen Z, probably just ride it out. Like the market generally tends to come back if you look at it in the long run. If you look at it on a 5-year, 10-year, 15-year basis, this is going to be a downturn. It's going to be a bad year, maybe 2 years, maybe three, but eventually it generally tends to come back. Now, if you are closer to retirement, right? If you're maybe on the older side of Gen X or maybe a younger boomer or whatever, and you want to do something that's safer, bonds, like I said, are one avenue. It doesn't have to be treasury bonds. There's other types of bonds. If you get a corporate bond, a city bond, anything like that, it does have a higher risk than the US government bond because whoever you're borrowing that, whoever is lending you that money cannot print their money.
Mm.
If I get a New York City municipal bond, New York City theoretically could go bankrupt and not be able to pay me back, and I would be stuck holding the bag. Whereas if I get a bond from the US Treasury, they can just print their way out of it to pay me back. If I get a bond from Coca-Cola, Coca-Cola could theoretically go broke and not be able to pay me back. When's the last time that's happened? Like not in anybody's here's lifetime. So that's what you have to think about in terms of bonds. There's also other avenues such as like CDs, certificates of deposit,
Hmm.
which are really stable as well. These are essentially investments that allow you to lock up your money for a specific amount of time, let's say 6 months, 12 months, 2 years, whatever it may be. And then because you're giving up that flexibility, you get normally paid back a higher interest rate from
Hmm.
whatever, institution you're getting the certificate of deposit from. And then overall, if you don't want to have to do all of this stuff manually yourself, or buy a bunch of gold bullion and buy a safe or whatever. There are many like institutions that will just kind of like manage this for you.
Mm.
So they have age targeted profiles on like, whoever you go to you do investments with where you don't have to do a lot of the thinking. You can just say, hey, I'm this age, this is the profile that I am, and they'll give you a diversified mix
Mhm.
based on your age and how close you are to retirement.
Yeah,
So
those are
that's generally what I tell people to do because it's the least effort.
are you referring to target funds?
Target funds, correct.
Yeah,
Target date funds.
yeah.
Yeah, yeah, but some people are screaming like, okay, so since you're the money coach, right? You said the money coach, right? You did
I'm
say
a I'm a I'm a personal finance coach. Yeah.
personal finance coach.
Correct. Yeah. Most of what I focus on is like I said, behavioral, like
Mm.
the actual discipline around sticking to your budget. But of course, most of us are
Yeah,
trying to make money, so investing becomes part
yeah,
of that. Yeah, of
yeah. So you want to make money, right? So
course.
so 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 what do you provide in terms of making money, right? Do you Because people are like, I got one for you. I got a good one for both of you all, right? So a lot of so there's been massive layoff, right? And a lot of Fortune 100, Fortune 500, Fortune 15, Fortune 16. So they're laying off professionals by the dozen or dozen thousands, right?
Right.
And so you have these folks who just got laid off, and finding a job now is usually you can find another job in 3 months, 6 months. Is people have been out of work for a couple of years now, right? So in terms of money habits, right, they're living off their savings and they're depleting them, and they haven't. And maybe both of you guys can answer this question. So they're living off their savings and they're depleting them, right? And so, but they still have a stash left, and they would like to invert that. They would like to take their stash of money and put it somewhere where it can start making money for them, right? So, what would you guys suggest and then how much would you suggest at minimum they would need to kind of come up with a strategy to kind of survive and thrive in the fate of what's happening today?
So the question is, if I have a stash of money and I I've
Can't get a
just been
job.
laid. Yeah, say again.
You can't get a job.
Okay, I can't get a job. So the person is unemployed, but they have a stash of money.
Yep.
Where should I put my money to help it grow?
Yes.
Okay. So kind of similar to what I said before, I would like anybody that tells you like, hey, I know this investment is the best investment ever is like, I can't tell you for sure which investment is going to pay off, but I can tell you that if you diversify, you lower your risk,
Mhm.
and there's many different types of investment. The ones with higher risk have higher reward. So it depends on your risk tolerance. If you're young and you're like, yeah, I'm unemployed, but I'm 25 and I wanna bet it, then go for something that's higher risk, Have more Bitcoin in there. I'm
Oh,
sure Nolan's about to tell us that right
I
now.
know. No, they're ready. Right. No,
Um,
they're ready for the smoke.
he's ready, yeah. He's probably got a slide queued up.
Well,
How you gonna
let
do
me.
it?
I would say though, if you think you're going to need that money within less than a year, you probably shouldn't invest it into
That's actually,
anything.
yeah.
Yeah. So like a
Correct.
Roth IRA, something like that would be somewhere safe. And we can kind of get into the details of that a little bit later. But
Correct.
maybe like a Roth IRA, because with Bitcoin, I think the goal with Bitcoin is long term. It's not like you put in, get out, put in, get out. So I don't
Correct.
know if
Yeah.
Bitcoin would be the immediate reaction or the immediate investment that you would go in, but that's my opinion. But Nolan, if
Oh yeah.
you want to say something more.
Yeah, no, I agree. And I actually think it's important to highlight the difference again of saving and spending. If you're in a situation where you just got laid off and you have a pool of money, my first thought wouldn't be trying to figure out what to invest in. It would actually be trying to figure out how can I get back to increasing my income so that I can have income to pay off, my daily or monthly expenses, and then I can have ideally some left over to save. And I wanted to go back to your point earlier, Debbie, if you were talking about gold, like no one's spending it as gold. And again, going back to my point I just made, people got to make the difference of saving and spending. People save Bitcoin, people save in gold for long-term gain and purchasing power, right? Like, yeah, I can go spend my Bitcoin, but I know my Bitcoin is going to be way more valuable in 2 to 3 years. So I don't necessarily want to spend it. I mean, I like to spend my Bitcoin, but like ideally people save it. Um, so yeah, I just think, and that's in from your question, people just need to focus on income generation in that situation and then focus on investing, right? Because there's nothing like needing to invest and needing that investment to like generate a return like tomorrow or in a month or in a year. Like that is a tricky situation no one wants to be in. And being able to just have income that you know you can bank on, that you can take care of your expenses, and then have money left over that you can save for the next 5 to 10 years, no stress, no worry. That's the best position to be in my opinion.
Yeah.
I couldn't agree more. If you're in a position where you're unemployed altogether, I'm generally telling my clients, how are we going to make this money stretch for as long as possible in
Hmm.
order for you to be able to have time to do your job search or start up your business or whatever it is that's going to bring you income. But investing is by its nature risky.
Hmm.
So if it's the last money that you have, you probably don't want to be risking it.
Yeah. So Ryan, I want to go back and so, you know, when my kids were little, I have two boys, and Nolan's my youngest. And so I started probably, I don't know, when my oldest, maybe 8, 9 years old, when people would give them birthday money, I would not give them, I would not give them their money. I would take it and I would invest it in 529, or I would take it and put it in a Roth IRA. And boy, they used to be so mad at me. And when my oldest, he did an internship when he was in college, and he worked for a company, and I made him give me his paycheck. And I invested in the Roth IRA. I said, "You're mad at me now, but you'll thank me later." And so I don't know if he ever gave me full credit, but I'm sure he was glad that I did what I did for him because he had money.
What you're doing is what my company does, right? You're creating a discipline, you're creating an accountability loop for him where things are automated and you're automatically taking the paycheck and investing it for him. So that's, I think, a really important like role to have somebody do that for you in your life. Love it.
Yes. So what I wanted you to do for us, and I know we talked about, kind of queuing up a slide because, I was a follower of the Susie Ormans, the Dave Ramseys, and just understanding the pattern, right? Because, although I worked in financial services for a very long time, no one taught me money management, right? So I basically, it was something I had an interest and a passion for, so I had to self-teach. And so those were the people that I got my lessons from, and the Robert Kiyosaki's and all the people, right? And so I only knew to do what I did for my kids because I started following, these people, and I knew if I could start them out young, they say, I think they said 21. I think their age range was like starting at 21, but I was, doing that earlier than that. So if someone starts very early, and so like I said, for my boys, it was, 8, 9, 10 years old, and then we would just put money into their accounts. Can you show our audience investing early? If you invest 10,000, 5,000, and then you let it sit for 10 years and you get that average rate of return of 8 to 10%, 12%, what that might look like over a time span of, 10 years or 15 years. And so people can really get that foundation, because sometimes people think you have to be rich to invest. That's a not a true statement. And sometimes people think you can't do as little as $10 or $20 or $50, which again, that's not true. You can. So let's dispel some of those myths that are out there for people who may not have large sums of money, or for people who do have large sums of money. I think the principle is the same. So, how do you get started? And maybe we can show people, we'll talk about how you get started and give them some perspective on investing some amount of money and what it looks like over time.
Yeah,
And
sure.
can you also add the component of behavior, right? You talked about behavior because behavior is, you can have all the beautiful plans, but
Yeah,
if you don't execute on them, you're still in the same boat, if not worse, right? So could you lace in the behavior component when you speak to that as well, right?
absolutely, absolutely. This is my favorite topic. So I'll
Bring
I'll
it
I'll bring
on.
an example up for you. So let me share here. So let's do an example, like you said. We will talk about interest impact and behavior. So this is Kevin. He makes $25 an hour, let's say. He gets paid every other week biweekly. So he might think, all right, I'm just trying to get these bills paid, live a little bit of life, go out once or twice in a month and make things happen. And I don't really have money to start investing. Well, as long as you have a little bit of discretionary income, you can actually make really big impact by being consistent and starting early because of the power of number one, the consistency, but number two, compounding interest. So first off, let's just say if I'm a person that makes $25 an hour, if I'm Kevin, how much do I actually have left in my bank account, do we think, every couple of weeks on that biweekly paycheck? Can any of you guys maybe guess which of these numbers is probably closest to what he's actually going to have?
Probably $1,000 if I had to guess. Oh, well, you said is this 2 weeks or
2 weeks.
2,000?
Most people get paid. It's the most common form of payment is usually biweekly.
Oh, okay, so maybe the 2,000.
Okay.
Mhm.
What are you
After
about to say,
taxes and
Pamela?
oh, go ahead.
Well, I was going to say, is that a 40-hour work week? I'm reading your
Let's assume
question.
a 40-hour, let's assume a 40-hour work week, no
Okay.
overtime. Regular 40-hour work week, no overtime, 2 weeks. So
All
he's gonna
right.
work
So after
80
tax,
hours.
1,500 to 2,000.
Yeah.
Oh,
Okay.
yeah.
Nolan?
Agreed. I just did the math.
Yes.
25 an hour for 80 hours for 2 weeks is 2,000, but after taxes and deductions, it's probably
Yes.
gonna be 1,500.
I can't get anything past you. Okay.
Yeah.
1,500. Yeah.
So he did the exactly right. So an easy way to remember this is whenever you want to convert an hourly wage into something that is bigger, number one, you could just multiply by the hours, like you said, 25 times 80, that gets you to 2,000. If you want to convert it into an annual number, which you'll need a lot of times for like a form or something like that, you can just multiply it by two and then add 1,000 to it. So
Mm,
$25 multiplied by two is
50,
50,000 a year
50,000. Yeah.
because we normally work 2,000 hours in a year. If you figure 50 weeks at 40 hours a week with 2 weeks of vacation. So
Mm,
that's a quick way to make the transition. So with this $1,500 paycheck, right? That's what actually is going to hit his bank account after all of the, deductions and such. What can
mhm.
he actually do? Well, saving automation. To your point, Debbie, about the behavioral piece, make it easy. The easiest thing that you can do is to automate whatever it is, whether it's saving or investing, so you don't have to think about it. Because as humans, there's going to be a day when you don't want to do anything. There's going to be a day when you're lazy. When you wake up and you don't want to hit, go, you want to hit that snooze button instead on the alarm clock. And if you make it so that you have to choose over and over again to make a manual savings or a manual transfer, when motivation erodes, you're not going to do it. So whenever you have that burst of energy, which is hopefully right now as you're watching this, set it up right now. Set up some type of automation right now. So let's say for Kevin, he decides, all right, I can do maybe $50 a week, which is $100 out of every paycheck I can put aside. Like that I can manage. That is like $7 a day if you break it down. You probably can get to this, and if you can't get to this, you can probably get to half of it. Automate that amount to be going into whatever investment platform you have, or at least putting it somewhere, aside for safekeeping. So if we were to say he does that, $100 per paycheck, how much money do we think he'd have after 1 year and after 10 years?
So
No
So,
calculator this time.
yeah, so 26 weeks, right? So we're talking about 26 weeks because it's half. So it's 2,600 and 26,000.
All right, can't get anything past you. So
Yeah.
2,600 and 26,000, right? So that's real money. People may not realize that, but with just a year of doing that, you'd have 26 grand, which if you're trying to make the jump from being a tenant to a homeowner, which I see a lot of clients are trying to do, that could be your down payment. That's a down payment on a starter home right there. With the FHA loan, which you only need 3.5% for, this type of down payment can get you into a decent sized house. You might be looking at if you're looking at like let's say a $400,000 house, 3.5% of that is only about a $15,000 down payment. So this is more than that. This is like enough of a down payment, even some of your clothing costs. Now, we wanted to talk about growth. So let's talk about compound interest. What do I mean by that? Basically, if you're putting your money into just a savings account, like let's say Kevin was just putting that money aside, he's going to get the 26,000 like you just said. So
Hmm.
that's the 0% option. That's like literally no growth at all. He's putting it in a safe, or he's putting it, you know, boomers will say like under their mattress, or in a safe, or whatever the case may be. It's like literally in a
Mhm.
shoebox somewhere, like it's cash. So he'll only have $26,000 if he gets 0% return. But if you invested into a target date fund, which is usually going to be my recommendation, some type of ETF, which is going to like track an exchange of some sort likely, or a target date fund or something like that. Let's say on the low end, it returns to you 8%. And on the high end, it might return to you 12%. What do we think these numbers would be like at the 10-year mark if he were to do 8%? Well, let's start with that. How much do you guys think it would be if he were to return 8% around?
You said compounded, right?
Compounding. Yep. So he's making that
Um,
8% from day one all the way till year 10.
okay, so is it compounding annually or semi monthly or
Let's assume it's an investment that is essentially like tracking the mark, like it's invested in like, stocks and stuff. So it's like literally every single day it might be going up or down. And then he's
Mhm.
gonna put every 2 weeks, he's gonna put more money onto it.
Oh, okay, okay.
So he
So
has like assume that he's holding like a piece of a target date fund, which changes minute by minute.
oh, okay, gotcha. So it's going to be compound. You can't do a simple interest. It's has
Yeah.
to be 8% times 2,600 for that year, whatever that is, then 8% times that value for the next year. So it's compounded.
Yeah.
It's
Yeah.
compounded math or future
Yeah.
interest.
You don't have to get a specific answer for this one. I would let's use the calculator, just like ballpark. like in thousands?
It's gonna
Do
be
you
a
think it'll
lot.
be
Gonna
27,
be
28, 30?
mm, it's gonna be in the six-figure range somewhere. I don't know, 100 to 200,000. I know it's kind of broad, but somewhere around there, 8%.
That's okay. Unless we did our math very differently, I think that's a little bit more aggressive than what we'd see. But I got 39,000 and 50,000 for 8%
Okay.
and
Yeah,
12%.
I was way
Yeah.
overshooting it.
Yeah. But still, you have the concept, which is that it's way more than if you just left it in a shoebox, right?
Hmm.
So like, of course, depending on how often it compounds and things like that, we can, we might see differences. But just assuming that it's a fund that's consistently growing, these are normal rates, 8% and 12%. The S&P 500 has been growing at like basically 12% for the last 80 years,
Hmm.
80, 90 years at this point. 12% is not out of reach. So that same 26 grand can be doubled basically if you're investing it from day one. So
Hmm.
start right now, start ASAP, start today.
So, question for you: have you ever considered tax lien certificates? Because with those, you get an even higher return on investment. You get like 24%, 18%, and there's
Yeah.
zero risk. Have you ever considered those in the
So are you talking about like in real estate, like tax lien sales?
Yeah, tax lien. Well, you can buy them over the counter too. Like you can buy like you buy debt. You can just go buy the after it's
The
already
actual certificates.
yeah, the actual certificates.
I have considered that. So I'm a real estate investor as well. I don't know if you knew that or if you just
I didn't. I'm a real estate investor. We're all real estate investors up in here. But yeah,
okay,
I
okay,
bought a
all
few
right. So yeah.
certificates. Yeah.
Yeah, yeah. So that's funny that you hit on real estate. Tax lien certificates are interesting. I've not so I've considered tax lien sales,
Hmm.
which I think would be the physical version of your like tax lien certificates.
Hmm.
And basically like for the audience, what that means is basically anytime you own property, you have to pay your taxes to the government.
Hmm.
And the government has a lien, lien, against your property, which means that they have a right to take it. That's when things get repossessed. So if somebody repos your car, it's because they have a lien against your car, which means they have the right to take it. So anybody that you owe money to for your house, like your mortgage company, they have a lien against your house. But their lien is secondary to the government's lien because they're the government. They just put
Hmm.
themselves first. So if you ever don't pay your taxes, the government can come and take your house. If you don't pay your mortgage, then the mortgage company can come and take your house. When that happens, the government now has a house,
Hmm.
and the government's not really in the business of doing real estate. Like they don't have a team of people who are experts in, real estate and buying houses and selling houses. They just want to do government stuff. So they want to just get rid of that house. And oftentimes they're happy, really, they want to get the taxes paid. They don't want to have the house at all. So an investor can come in and say, hey, I'll pay the taxes, give me the house, and I'll take it over from here. And then the government is happy to have that happen. And of course, you can get the house for much cheaper. So this is the tax lien strategy, which is something that I've looked into. I've not done it yet. Um, it takes a little bit of effort because it's done on a county by county basis. There's no
Yep.
like federal database of all tax lien sales. Like most things in the US, it's state by state, and in this case, it's actually
Mhm.
county by county. So you have to figure out what your county is doing. If you really have some money to invest,
Yeah.
go look at what tax lien sales they may have or tax lien certificates.
Yeah, yeah, it's a great. I bought a few, and I actually signed up for a database, so I wouldn't have to go hunt and peck for them. It's just one.
Tell us the database. What's the
Yeah.
if you want to share?
God, it's oh God, I don't know the name off the top of my head, but I'll find it and let you know. But yeah, they made it so easy. You could just go
All
online,
right. Glenn
go.
is gonna pop it up over your head like right
I
now.
know, right? Yeah, pop it up.
Yeah.
Yeah, you go across the nation and find certificates and just buy them, and just buy them and forget them. So, um, you don't know when they're going to get cash, but it's okay because it's like you just sort of to you guys' point about what you say, Nolan, investing versus what was it distinguish?
Saving versus spending.
Yeah, yeah. So if you want to forget it, set it and forget it, that's definitely a way you can set it and forget it because you don't know when they're going to cash them out.
So
So.
with these certificates, you don't the house is not yet being repossessed. Is that it?
Well, it's reached this period is overdue. So some states it's different state by state. So to your point, state some immediately if you're late, they put the house up for sale,
Okay.
immediately with a redemption period. And some, they just give you a lien. So some are liens, some are deeds, and some are both. And so you just pick and choose which one you want to go with, if you want the house or if you want the interest. Some people just want the interest only. They don't want the house. So they go with a deed, a lien state. And some want the house. So they want it to get the house and they buy the deeds. And so, and they wait for that redemption period to clear. And then if the person doesn't redeem, they get the house.
Mm.
So, but some people buy them in bulk. They just buy them in bulk and just sit on them, and then whatever pops out, they're like, hey, either they get a house or they get 18%, 24. Some in a state by state. Some states, like I think Maryland is 24%. Texas is really high. Florida is high. There are some states that they do them in bulk. They're cranking out certificates in bulk. You know. Um, but also you're getting a high returns on your, but it's zero risk because either you get the house or you get your money. So, and some people, like some real staunch
So
investors, want the house.
I think that we're jumping here. What does it mean to get the money? How do you get the interest? Explain that part.
Oh, when the person redeems their certificate, when they say, "Okay, I'm going to pay my bill," like some land developers, they buy bulk tracts of land and they don't pay their taxes on their land for a year or two later because they just wait until the redemption period until they're because sometimes like that they give them a year to pay it. If they don't pay it, they sell a certificate for it, but then they have a year to redeem it. So some developers wait until that year or 2 years
Yeah,
to
to actually pay.
redeem and
So
come
in
and
this
pay the
case,
bills.
you as the investor are paying their tax bill for them,
You pay, yeah.
and
And
then
they're
they have to pay you back. If they don't pay you back, you are now the lien holder and can take the property.
absolutely,
So
absolutely. So
that's fair. I
they
just
gotta
wanted to
pay
make sure
for,
you said
yeah,
that. Yeah.
they gotta pay back the taxes at 18%. They start at 18%. And then sometimes there's a fee on top of that. So not only do you get a 18% in some, 18% interest, but you also get a penalty fee. So, but some of them don't care. They're like, yeah, I just, I don't feel like paying. It's the weirdest things where some people are truly in, and especially now in this market with people losing their jobs, there's going to be a ton of certificates, a ton of tax. You can literally pick and choose wherever you want to, hone in on, and you
Yeah.
can probably really
Yeah. If
actually
you're a
get the
person that
profits.
has a little bit of money, in a time when the economy is going into a downturn, like Warren Buffett would do, it's time to
Mhm.
buy.
Mm-hmm.
Yeah,
Mm-hmm.
yeah. So this is great, guys. Thank
Yeah.
you
And
so
on
much.
a
Yeah. So Nolan, go ahead. I want to give you the opportunity. We're going to be wrapping up here. So I want to give you an opportunity to show from a Bitcoin perspective, if someone had some money to invest, how they could go about doing it and what would their return on investment be.
Yeah, Ryan teed it up for me perfectly. So let me share my screen as well.
Nice.
Here.
I like being around smart people.
So similar to Ryan and his diagram, obviously compound interest is, I think Einstein said it, it's the eighth wonder of the world. So in this example here, and this is again going back to our conversation at the beginning of the podcast, is just starting small. Bitcoin historically is, or it is the best performing asset in human history. No other asset has ever came close to it. And I still think we have a long ways to go of gains in front of us. So the last 5 year CAGR, which is a compound annual growth rate, is Bitcoin's 5 year CAGR is around 40 to 50%, which is very high for an asset where, like Ryan has said, the S&P's average return from like 8 to 12%. So we're really up there in the Bitcoin world. But in this example, we even took the CAGR down to say 20%. As Bitcoin continues to grow and mature, the CAGR may come down. So in this scenario, you have somebody buying $10 a day of Bitcoin. What would that look like in 20 years? With the 20% CAGR, $10 a day, you're now looking at $978,000. Um, and then obviously if we just continue to go, higher from there, 25% is 2.1 million, 30%, 4.9, and then 35%, $11 million in 20 years. And that's again, Bitcoin's average CAGR is 40 to 50%. So that's not like it's out of reach for these numbers to be hit. And $10 a day. So it's wealth is attainable for everybody. They just have to break it down in a way that feels achievable to them. And and so I just love this example because, I think people can afford $10 a day if they got to cut back on some coffee or cut back on something, they can figure it out. But it's attainable. And so yeah, I just wanted to share that and kind of just give that long-term perspective and view of that it's attainable for everybody.
So
I'm gonna need
Nolan,
you to
is
help me
this?
sign up after the call.
Yeah,
I got
that
you.
was gonna be my question, Nolan. How does one go about? Because my
Yeah.
daughter, she just started her career, and she's starting saving. And how would she go about even like I've heard of Litcoin. Have you heard of that terminology as well? Litecoin, Litecoin, or like
Litecoin.
what
Yeah, it's
is
just a
that?
It's another crypto. I don't put much into it.
Don't subscribe to that one either.
Mhm.
Say it again. Say it
You don't
again.
subscribe to that one?
No,
That
there's a term called a Bitcoin maxi or Bitcoin maximalist. That's I'm really only Bitcoin only, as I've just been in the broader crypto area for the last 7 years, and I've kind of figured out what the noise and some of the scams and stuff.
oh, okay,
I
gotcha.
believe in just Bitcoin and Bitcoin only. But yeah, I mean, you can buy Bitcoin. I buy Bitcoin personally via Strike app, Strike. You can also buy it through another app called River.
What about
Now we started
Robinhood?
this
What about
Robinhood.
Robin?
Yep, you can buy it through
Oh, you do?
Robinhood.
Cause yeah, okay.
And TradFi, traditional finance is starting to come to it. So like Fidelity, you can buy it now there. So yeah, you can buy it basically kind of almost everywhere. The most important thing I tell people is that one of the key differences from Bitcoin and like all other asset classes is that you can actually own the Bitcoin. Like yeah, you own stock, like you can own the S&P, but like you can't tangibly own it because it's in a brokerage account and there's a whole bunch of intermediaries that like control you from not being able to actually own the asset itself. You can actually own Bitcoin in self-custody. So it doesn't, when people ask me where do I buy it from, you can again buy from all these different platforms I just mentioned, but what's most important is that you eventually, it doesn't have to be immediately, but over time, you get to become a self-sovereign individual by self-custodying the Bitcoin. So we can get into that rabbit hole later at a later date, but I just wanted to throw that out there that, you can own your own money and kind of be a self-sovereign individual with Bitcoin, which is one of the
So,
key attributes of it.
so just for clarification, so you're essentially saying you can take your Bitcoin account and convert it to Bitcoins. Is that what you're saying?
You,
In
s-
a sense, or
you said a Bitcoin account.
yeah,
Sorry.
you can take you can cash out your Bitcoin account into Bitcoins. Is that what you're saying, or fractional Bitcoins, or no?
So let's say like I can buy $10 worth of Bitcoin on or $100 worth of Bitcoin on Strike or even Fidelity. I can
Hmm.
send that Bitcoin because it's sitting on their platform. I would have to get something called a hardware wallet, and I would send the Bitcoin from Fidelity or Strike to the hardware wallet, and that's what we call self-custody, your private keys, and then you own the Bitcoin. So
Oh,
until you move it from, the Fidelity or Strike to your self-custody, it's not yours, it's theirs until you move it to
mhm.
self-custody, if that makes sense.
Gotcha. It makes sense.
Yeah, and then when you have your own Bitcoin, you can go all around the world with you can have millions and millions of dollars worth of Bitcoin with you, and you can basically store it in your head because the private key is 24 words, and you can go around the world anywhere and be a sovereign individual. And like you can't say even do that for gold. People talk about in a Mad Max scenario, I needed to leave the country and I have say $1 million worth of gold. I can't get through TSA with a bunch of gold bars. But I can get through TSA with, millions and millions of dollars of Bitcoin because it's not a tangible asset. I can store it in my head and, be in Europe in 12 hours and have all my wealth with me.
Nice. I like that.
Yep.
I like that.
So, and I know we need more time, and so we have to invite you guys back because the other thing I wanted to talk about is, um, you know, because our family is new to Bitcoin. Nolan created a family account for us, and so everybody pitches in whatever dollar amount that we agree to, and then Nolan buys Bitcoin for our family. And so I'm sure there's other things like that available for just the traditional way of investing as well. It might be a little bit, I don't know. I'm not gonna say it might be a little bit more challenging, but it would just be, I don't know how that would work in a mutual fund world or an index fund world. But for those people in our family who are not as acquainted or in tune to the Bitcoin space, but we know that the world is advancing to that standard. So Nolan's been very helpful to our family in getting everybody as a family fund and also getting individuals established on the platform or a platform to be able to buy their or purchase their own Bitcoin. And so I would love to talk about a little bit about that later on at some point. We'll have you guys back. And you
Something
guys
I'm
are the
absolutely
voice of your generation. And I hope that this message gets out to everyone, whether male or female. It's information that is needed, and it's information that needs to be acted upon, right? And so the sooner the better for people out there, whether they go the traditional way or whether they decide to, go Bitcoin. And another thing, people might say, well, Nolan, you can really quickly talk about, how do I use Bitcoin? But I can't use it at McDonald's. There are more and more merchants that are putting in Bitcoin cash point of sale. cash
Yeah.
cash registers out there so people can use, and so they won't feel like they have this money but they can't use it. Really quick,
Yeah.
Nolan.
Yeah, Square literally yesterday just announced that they're rolling out to like 4 million merchants who use their Square terminal that they can now accept Bitcoin, which is huge for Bitcoin adoption. So if you go to your local coffee shop, your local diner or whatever, and if they have a Square terminal, you can ask them, hey, can I pay in Bitcoin instead? And there's a whole plethora of benefits of for the merchant for doing that. No fees, no chargebacks, a
No
whole
fee is
slew
gonna
of
be crazy.
Wow,
Yeah.
yeah, well,
that's
of
huge.
benefits. And that again is just going to help with everyday adoption as Bitcoin as money. So that's a really big announcement from Square. So I'm excited to see that, kind of prosper, out in society.
And one more thing on that theme, then for we're going to wrap up. So I'm a realtor, as most people know,
Mhm.
and so a couple of years ago, I came across a company who actually allows buyers to buy their homes using Bitcoin.
Mm.
So and that was probably 3 years ago, 4 years ago. So this, and I mean, now, you hear Bitcoin mainstream TV,
So last week,
so
yeah.
it's
There's some
happening. Yes,
Yeah.
big sports stars that are taking some of their salary
yes,
Yep.
in
Yep.
Bitcoin and
yes,
things like that. So yeah,
yes.
And to your
it's crazy.
point, last week, Fannie Mae just announced that was like the news of the week last week. Fannie Mae now is allowing Bitcoin use as collateral for a down payment for a home.
Oh, wow.
So, it's if you need to have a down payment of 20% and you don't have it in cash, but you have it in Bitcoin, you can use that as a down payment and still take on, your normal FHA loan or whatever.
Oh,
But that's
nice.
just another massive step in adoption of, hey, you can like again, people are, oh, I can't buy pizza with my Bitcoin at Papa John's. Oh, but you can buy a house with it. So what are we talking about? So yeah, that was just a massive, massive news last week.
Okay,
And
let's go
oh,
ahead.
go ahead. Yeah, no, it's just wrapping up as well. I would love to come back on and talk. I know we didn't even get to talk about like state of the world, fiat. I wanted to talk more about fiat currencies, inflation, like what's really going on, and why Bitcoin matters in that situation. So I can't wait to have a part two with you guys.
Okay, well, maybe we can tee that up for next week, but we'll talk about that and see what we have for next week going and see if we can make that happen. Ryan, Nolan, it has been
Yes,
a
a
pleasure. You
pleasure.
guys are amazing, very smart young individuals, and I can't wait
Hmm.
to see what happens going forward for you guys and your businesses
Yes,
prospering. You again are the voices of your generation, and
yes,
I wish you guys all the best. And Debbie,
yes.
anything you want to say in closing?
It's been a blessing and learned so much. And one of the things that came very clear is that for those who've been sitting on the fence, especially with the Bitcoin down, I think it's down 60,000 points, right?
Yeah,
So
yeah, yeah,
so this is a kind of a buy signal, right? And then also Square purchasing some stocks of Square. I think they're publicly traded because they're driving their early adoption, right? So there's it's like a wave, whatever who's supporting the adoption of Bitcoin in the marketplace. They're going to be the winners. That whole vertical is going to be the winner. So thank you guys for sharing your thoughts. And helping us understand, translate our understanding into the what's real and what's hype. Like you said, Nolan, some of the different types of Bitcoin, or a version of it. I know Trump had a Bitcoin thing going
yeah.
on.
He had his own coin as well.
Yeah, was just as the president of the United States.
I know, it's crazy.
But no, thank you guys for your time and your talents and using what you have in your hand and sharing with us what it is,
Yes.
and letting us know how to adopt or how to use what you guys know. And so I really appreciate it.
Yes, and I'm gonna just put all your information in our show notes. So for anyone who wants to contact you guys for consultation, advice, helping them establish a IRA or Nolan or Bitcoin, they'll have your contact information. So thank you again, and you guys
Thank
have
you
a
guys.
wonderful day.